In 2005, Hurricane Katrina destroyed New Orleans. Over 1,800 people died, 800,000 homes were damaged or destroyed. The costliest natural disaster in American history. Homeowners who'd paid insurance premiums for decades filed claims. They'd lost everything. Their homes were gone. They needed the insurance they'd paid for. The insurance companies said no. Allstate, State Farm, nationwide. They denied tens of thousands of claims. Their reason? The damage was caused by flooding, not wind. Homeowners' policies covered wind damage. Flood damage required separate flood insurance. But the hurricane was wind and water together. How do you separate them? You can't. The insurance companies knew this. They used it to deny everything. One case became famous. Paul and Julie Leonard had paid nationwide premiums for 30 years, never missed a payment, never filed a claim. Their house was destroyed by Katrina. They filed a claim for $130,000, the value of their home. Nationwide sent an adjuster. The adjuster wrote a report saying the damage was from wind. Wind damage was covered. The claim should be paid. But Nationwide had a problem. If they paid wind damage claims, they'd have to pay billions. So they did something stunning. They told the adjuster to rewrite the report, change it to say the damage was from flooding. Flooding wasn't covered, claim denied. The adjuster refused. Nationwide fired her. They hired a new adjuster who wrote the report they wanted. Damage from flooding. Claim denied. The Leonards had evidence. The original report. The fired adjuster testified. It went to court. The jury was so outraged they awarded the Leonards $2.5 million in punitive damages on top of the $130,000 claim. But here's the thing. The Leonards had resources to fight. They had lawyers. They had time. They won. Most people didn't. They accepted the denial. They'd lost everything in the hurricane. They couldn't afford lawyers. They couldn't wait years for a trial. They just lost their homes and their insurance coverage. Nationwide and the other insurers saved billions by denying claims. They paid a few million in lawsuits to people who fought. But 90% of people didn't fight. The insurance companies won. This is how insurance works. You pay for coverage. When you need it, they find a reason to say no. And most people can't fight back. Let me show you how the scam works, why it's legal, and why you're almost guaranteed to be denied when you need insurance most. The insurance business model is simple. Collect more in premiums than you pay in claims. The difference is profit. In 2023, health insurance companies collected $1.5 trillion in premiums. They paid $1.2 trillion in claims. The difference, $300 billion, is their revenue. From that revenue, they pay operating costs and keep profit. But $300 billion assumes they pay all legitimate claims. They don't. If they can deny claims, they keep more. Every denied claim is pure profit. The premium was already collected. Denying the claim means they keep it all. So insurance companies are incentivized to deny. The more they deny, the more they profit. It's not a bug in the system. It's the business model, and they've gotten very good at it. Insurance companies hire former prosecutors and FBI agents to investigate claims. These aren't customer service representatives. These are people trained to find evidence of wrongdoing. Their job is to find a reason to deny your claim. When you file a claim, they investigate you. They look for inconsistencies in your application. They check if you disclosed every medical condition. They search for any reason to say you violated the policy terms. In health insurance, this is called rescission. They retroactively cancel your policy. You've been paying premiums for 5 years. You get cancer. You file a claim. They investigate your original application. They find you didn't disclose that you saw a doctor for back pain 7 years ago. They say you lied on your application. They cancel your policy retroactively. They keep all the premiums you paid. They don't pay the claim. This happened so often that the Affordable Care Act in 2010 banned rescission for individual health insurance. But it still happens in other types of insurance. And insurance companies still investigate you looking for reasons to deny. Let's talk about how policies are written. Insurance policies are 50 to 100 pages of dense legal language. Nobody reads them. The insurance company knows this. They write policies to be deliberately confusing, full of exceptions and exclusions. You think you have coverage. You have coverage except in the situations where you're most likely to need it. Homeowners insurance covers damage to your home, except from flooding, except from earthquakes, except from sinkholes, except from mold, except from wear and tear, except from negligence. By the time you list all the exceptions, what's actually covered? Almost nothing. But you don't know that when you buy the policy. You see homeowners insurance and assume your home is covered. Car insurance has the same structure. You have full coverage, except if the other driver is uninsured, except if you were partially at fault, except if the damage was from something other than an accident, except if you didn't report it within 24 hours. Health insurance is the worst. Your policy covers doctor visits, except your doctor is out of network, covers prescriptions, except your prescription isn't on the formulary, covers surgery, except the anesthesiologist was out of network even though the hospital was in network. Every policy is written to maximize reasons for denial. And the denials are legal. Because you agreed to the policy, you signed the contract. The fact that you didn't read 100 pages of legal language isn't their problem. Now let's talk about how claim adjusters are incentivized. When you file a claim, an adjuster reviews it. The adjuster decides if the claim is approved or denied. Adjusters are not neutral. They work for the insurance company, and they're evaluated on how much money they save the company. Some insurance companies pay bonuses based on denial rates. Deny more claims, get a bigger bonus. This was proven in court documents from State Farm and Allstate. Internal memos showed adjusters were rated on how many claims they denied. The result is predictable. Adjusters look for reasons to deny, not reasons to approve. Their job isn't to help you, it's to save the company money. And insurance companies train adjusters in denial tactics, delay, request more documentation, send you to multiple doctors, make the process so difficult that you give up. The average time to resolve a health insurance claim, denial through appeals, is 18 months. Most people can't wait 18 months. They need the medical treatment now, so they pay out of pocket. They go into debt. The insurance company never pays. This is strategy. Make the process so painful that people give up. It saves the company billions. Let me show you the tactics they use. Tactic 1 is delay. You file a claim. They say they need more information. You send it. They say they need something else. You send it. They say they're still reviewing. Weeks turn into months. Why? Because if they delay long enough, you might give up, or you might die. If you die, they don't have to pay. This sounds evil. But it's documented strategy. Internal documents from insurance companies have shown that delaying claims until the claimant dies is considered a win. Tactic 2 is lowball offers. Your house is destroyed. Repairs will cost $200,000. They offer $50,000. Take it or leave it. Most people take it. They need the money now. They can't wait years to fight for the full amount. The insurance company knows this. They make an insulting offer knowing you're desperate. If you accept, they saved $150,000. If you fight, they still saved time and paid less than they owed. Tactic 3 is deny and defend. They deny your claim. You appeal. They deny the appeal. You sue. They defend. Insurance companies have unlimited resources to fight you. They have lawyers on staff. They can drag cases out for years. They know most people will give up before trial. And if you do make it to trial, they settle for less than they owe. The settlement includes a non-disclosure agreement. You can't talk about what happened. Other people can't learn from your case. This is how they keep the scam running. Nobody knows how often claims are denied. Nobody knows the tactics. Each victim is silenced. Let me give you the numbers on how often insurance companies deny legitimate claims. Health insurance denies approximately 20% of claims initially. Of those, about half are reversed on appeal, but half aren't. That means 10% of health insurance claims are denied permanently. 10% doesn't sound like much. But health insurance processed 5 billion claims in 2023. 10% is 500 million denied claims. That's 500 million times someone paid premiums and was told no when they needed care. Disability insurance is worse. 60% of initial disability claims are denied. Of those, about 75% are legitimate claims, meaning people who can't work, who paid for disability coverage, are denied. Most don't appeal. The process takes years. They're disabled. They can't work. They can't afford to fight. The insurance company knows this. The high denial rate is intentional. Life insurance denies about 5% of claims. That sounds good until you realize life insurance is the simplest insurance. Someone dies. You show the death certificate. They pay. Yet they still deny 5%. Why? Because they investigate. They look for suicide within the exclusion period. They look for undisclosed medical conditions. They look for any reason to deny. And 5% of the time, they find one, or they manufacture one. Auto insurance denies about 15% of claims. You had an accident. You file a claim. They say you were at fault. Or they say the damage was pre-existing. Or they say you didn't have the right coverage. 15% of the time, they find a reason. The pattern is clear. Across every type of insurance, 10–20% of claims are denied. These aren't fraudulent claims. These are legitimate claims from people who paid premiums and followed the rules. The insurance industry denies claims because it's profitable. Every denied claim is money kept, and the regulatory system lets them get away with it. Now let me show you why it's legal. Insurance is regulated at the state level. Each state has an insurance commissioner. The commissioner is supposed to protect consumers. In reality, most insurance commissioners come from the insurance industry. They regulate the industry they used to work for, and they plan to work for after their government term ends. This is called regulatory capture. The regulators serve the industry, not the public. In 2019, the insurance industry spent $162 million on lobbying. That's more than oil and gas, more than pharmaceuticals. Insurance companies buy influence at every level of government. The result is laws that favor insurance companies. In most states, insurance companies can't be sued for denying claims unless you've exhausted all internal appeals. That takes 18 months minimum. By then, many people have given up or died. Some states cap damages in insurance lawsuits. You can sue, but the maximum you can win is what they owed you originally. No punitive damages, no compensation for the years of fighting, no penalty for denying a legitimate claim. This means insurance companies have no downside to denying claims. If they're right, they save money. If they're wrong and you sue, the worst case is they pay what they owed anyway. There's no penalty, no incentive to approve claims up front. The law is designed to protect insurance companies, not you. And the insurance companies wrote most of these laws through their lobbyists. Let me show you the ultimate example of the scam. Health insurance in America is the most profitable insurance sector. In 2023, the top 5 health insurers made $41 billion in profit. United Health alone made $22 billion. But here's what should make you furious. These profits come from denying care. Insurance companies employ doctors to review claims. These doctors never examine patients. They review paperwork. And they're paid to deny. Your doctor says you need surgery. You file a claim. The insurance company's doctor reviews it. They've never met you. They've never examined you. They look at your file for 10 minutes. They say the surgery isn't medically necessary. Claim denied. Your doctor, who examined you, who has years of medical training, who knows your condition, says you need surgery. The insurance doctor, who's never met you, who gets paid to deny claims, says you don't. The insurance company believes their doctor, not yours. This happens millions of times per year. Necessary medical care is denied by someone who's never examined the patient. Because the business model requires denial. People die from this. There are documented cases of people dying because insurance denied treatment their doctor said they needed. The insurance company faces no consequences. They say their doctor disagreed with the treatment plan. Medical judgment, no liability. The family is left with medical bills and a dead relative. The insurance company keeps the premiums and pays nothing. The system protects them. Let me show you the math of why insurance is a scam. Over your lifetime, you'll pay approximately $500,000 in insurance premiums. Car insurance, health insurance, homeowners insurance, life insurance, all of it. How much will you get back in claims? Statistically, about $300,000. You'll pay $500,000 and receive $300,000. The insurance company keeps $200,000, but it's worse than that. Because that $200,000 is pure extraction. It's not money you spent on something you got. It's money you paid for protection you never received when you needed it. And for the unlucky ones who have their claims denied, they pay $500,000 and get back zero. The insurance company keeps everything. This is the scam. You pay for a service. They provide it only when they feel like it. When you actually need it, they find a reason to say no. And you have no recourse. Your parents lived in a different system. Insurance companies used to pay claims. The model was spread risk across many people. Most don't file claims. The premiums from the many pay for the claims of the few who do. That was legitimate insurance. Risk pooling. Today, the model is collect premiums from everyone, deny as many claims as possible, maximize profit. It's not insurance anymore. It's legalized theft. And you can't opt out. Car insurance is legally mandatory. Health insurance is effectively mandatory. Homeowners insurance is required by mortgage lenders. You must participate in a system designed to take your money and deny your claims. The insurance companies have won. They've created a system where you're forced to pay them. They're not forced to pay you, and the law protects them when they deny legitimate claims. If this changed how you see insurance, if you finally understand that you're paying for coverage that won't be there when you need it, then you're starting to see the scam. Subscribe if you want to understand the systems designed to extract your wealth. Because they're not going to explain this on the insurance commercial. They're going to show you a friendly mascot and a catchy jingle. But behind the mascot is an industry that collected $3.6 trillion from you last year and denied 500 million claims. You pay for coverage they never provide. That's the business model. And it's working perfectly. For them, retry Claude can make mistakes. Please double-check responses.